We look back historically, look at the US, which is the biggest economy in the world. That's why we talk more about the US than any other country. But the US since 1930 has only had 4 real budget surpluses, and that was in the, I think, 50s and 60s, a couple in the 50s, a couple in the 60s, and they were small. And the ones in the 90s over the Clinton ones were not surpluses.
Okay.
They were actually, the debt went up in the 90s. Okay. They just faked it. They just transferred from capital to revenue and to make it look like a surplus. It wasn't a surplus. So basically, for 90 years, with 3-4 exceptional years, the Fed has or the US budget has always been in deficit. And now it's in deficit by almost 50% of the total spending. I mean, this is a bankrupt country with a bankrupt policy. And now, as you say, we're looking at, because it can't be done with current dollars, so they'll come up with a new dollar that sounds like this is a new era, a new way to spend money, and the old one doesn't count. We just put that aside, write it off, forget about it. And it's exactly the same thing, and again, increasing printing. Don't they see what's going to happen here? And don't they see that the end is near?
I think they do, but there's, I mean, what would you do if you were a politician in the US, or if you would be at the Federal Reserve?
I'll tell you, number one, I could never be a politician because I would be too honest. And you can never tell the truth as a politician. And secondly, okay, if I was forced into being a politician or head of the Fed, I would do exactly what they do. I would print as much as I could. I would keep everybody happy. I keep the stock markets high, and then I'll quickly pass on the baton to the next one. And so I'll be okay. And that's what I think what they're doing now. Each one is saying, okay, I'll do what I can for my period, and then someone else will be blamed for it. And they've succeeded quite well. I mean, I never thought earlier this, like 6 to 9, I never thought that they would actually succeed for another 10, 15 years to hold this whole thing up without collapsing. I mean, that's a skill in itself, but of course everybody wants to believe it. Everybody wants to believe that the emperor actually has got clothes because it suits everybody. And since it's the people with the money who actually prosper the most, and therefore, and they have the control, and therefore they see to it that politicians continue to create fake assets that everybody believes are real assets. But this, I think we are at the end of a major era. Whether that's a 300-year era or whether that's a 2,000-year era, historians will write about in the future. We won't know, or we will only see the beginning of something. So I think we are in for a major change in the world. What did Einstein say? That I know how the third world will be fought, i.e. obviously nuclear, etc. But the fourth one will be fought with sticks and stones. Yeah. And I hope that's not going to be in the case. But I see the risk of a major collapse. And that would be very unpleasant for the world. But there is, so we've been talking about, and you are saying now that, yes, they are going to, it's more printing now in a different form. It's a new currency, a new era, central bank, digital currencies. Do you think that's going to last for any period of time?
No, I mean, I think, we both like a good laugh, and I just read that a couple of central banks said that actually inflation is so high because of climate change. So they have to print more and invest in green bonds to bring climate change down, bring temperatures down, and then further on to reduce inflation rates. I mean, I think we could never come up with such a crazy idea, but this is what's really happening, and I think you know, coming back to the topic, I think the creativity of central bankers is outstanding, yeah, because now at the moment it seems that the mandate of the ECB and of the Federal Reserve has changed. I mean, I didn't see any new laws, but if you listen to Jay Powell, but also especially to Christine Lagarde, they sound like Greenpeace activists or social workers. So, and I think this is mainly, you know, to distract from the inflation numbers that are coming out, you know, at higher and higher levels nowadays. And I think that people really start feeling it, and you know, the winter is ahead, and I think people, when they get the electricity and heating bills, it will be brutal for many households. And I think that at some point, the pressure on central banks will be too big, and perhaps then this U-turn will have to happen quickly. Now, if we compare it to Paul Volcker, whose job was to kill inflation, and you know, we all know how aggressively he started hiking interest rates.
Yes.
I mean, we are so far away from that.
Yes,
yeah.
yes.
Now, even, you know, 25 basis points would be a very, very big topic for financial markets. So, I mean, I think my overall longer term scenario is that we will see that the great moderation is over, that we will have to get accustomed to inflation rates at 3, 4, 5%, possibly even higher. But on the other hand, I don't think that bonds, and especially government bonds, will compensate for that inflation. So we are really at the beginning of an era of deeply negative real rates, which goes hand in hand with further financial repression. So this is the scenario that I'm seeing. And
Can we just explain that? So negative real rates means that inflation rate is higher than interest rates.
Exactly.
And that means that investors or people with money in the bank can never get a real return on it. They lose money every year because the interest is negative after inflation. And of course, I started my working life in the very late 60s. And I experienced the whole of the 70s inflation, and I did it in a country in the UK which had very high level of inflation also. So I often tell the story that, you know, my first mortgage I got in 73, and 74 I paid 21% interest on my first mortgage. And you know, that's more than well, people today, I mean, they couldn't pay. A lot of people borrowing, certainly in Europe, at 1% today, mortgage rates. You can get in Switzerland here 15%, 15-year mortgage at under 1%. So, you know, nobody could even, you know, if you increase interest rates to 5%, nobody could survive with that. Nor could governments, of course, or states or anybody. And if you increase them to 15 or 20, like in the 70s, and of course, you know, it's not, people think that the Fed can control rates forever. I don't believe that. They're doing their best to control short rates, and they've done very well so far, has to be said, by printing this much money and holding the lid on interest rates. But you know, what will pull rates up is the long rates in the end, because they don't control the long rates to the same extent. And I think there will, at some point in the next few years, there will be a sell-off in the bond market, in the long end of the bond market, and long rates will start going up, and that will pull short rates up also. And of course, then we have a disaster scenario for the world, because no government, no individual could afford these higher rates. How likely do you think that is?
Well, it's going to happen at some point. I think that as soon as the bond market really gets nervous, then we will see at some point, and I think we are already quite close to it, the implementation of a yield curve control. And this is something that we already had, I think from 1946 till 51, in combination with deeply negative real rates. And back then, the US basically got their debt problems under control. But I think the comparison doesn't make any sense because, you know, back then demographics were completely different. You know, basically the whole economy had to be rebuilt. A whole continent, Europe, had to be supported to be rebuilt. And we didn't have this enormous amount of financialization of the economy. So I think it doesn't make any sense to compare the current setup with the time after the Second World War. That many people do this comparison. But I think at some point, probably it's going to be a round number at 2%. As soon as 10 years go above 2%, then we will see more and more research coming out from central banks, more and more voices saying, well, we have to at least temporarily implement yield curve control and basically, say, well, everything above 2% will be bought by the Federal Reserve. So what does it mean?
Yeah, exactly.
It basically means unlimited quantitative easing.
Exactly.
Now, the question is, if the market is going to believe that they will be successful with this yield curve control. I'm not so sure. I think one advisor of a US president, I think, was it Bill Clinton? I don't know, said if I would be reborn, I wanted to be to become the bond market, because the bond market is actually so important and so powerful.
Absolutely.
But most people completely underestimate it. However, I think we're seeing manipulation or market interventions in basically all areas of our life. But I think the intervention that we're seeing in the bond market is probably the biggest and the most important one, because this natural signal that the bond markets would give us, it's not there anymore. So my take would be, as I've said, yield curve control at some point. And then I think that countries will try to increase their debt structure. Austria gave out a century bond, for example, very successfully recently. And then, of course, and this is where financial repression.
Can you imagine in a few years' time, we are right, how foolish these guys would be who bought a 100-year bond with a yield of 1% or 1.5%, whatever.
Yeah, but I mean, if you're selling it, I mean that's a pretty good move.
Wonderful, yeah.
But I think that the problem is, and this is where financial repression comes into play, that capital is being pushed or funneled into areas, into markets where it would normally never go to. So for example, for a big institutional investor, for an insurance company, it's impossible to buy physical gold.
Yeah.
But it's totally fine to buy 10-year Greek bonds at, I don't know, 0.8 or century bonds, whatever.
Exactly.
So I think people should not underestimate this financial repression, but who's going to pay for it in the end? Of course.
Exactly. But I mean, you're now saying, which I agree with that, I mean, they will have to, in order to try to keep rates under control, they will have to issue unlimited amounts of money again. Like we have seen already, but now it's going to be at even a higher level. And of course, we know what that will lead to. And we know both that first of all, but the amount of debt that's going to be outstanding. I mean, the reason why in the long run it doesn't work is that at some point, fake markets with fake interest rates, fake money, because remember, all the money printed has zero value. This you print $100, but it actually says $100 on it, but it has zero value because it costs nothing to produce it. So therefore it has zero value. And at some point, the weight of all the money printed will mean that all the money will go down to zero. It has to. That's inevitable consequence of what they're doing. Nobody thinks about consequences today. They're just looking at short-term solutions. And as I said, if you're a government a leader or a central bank head, then all you think about is passing on the baton to the next one. But as we said before, it always leads to a collapse in the end. So we are here in a very, we live for a very short time, and we see a small part of what's happening in the world. But if we look back at history, we know that's what we're talking about is inevitable. All bubbles collapse in the end. So it's only a question of when. And we worry, or the world worries, and the market worries about every day. What's the Fed going to say tomorrow? Who's going to be the new Fed head? It will make no difference in the long term. Nobody will remember any head of the Fed, maybe one or two, but probably not at all. And and now, as you said before, also now it's about the whole world is focusing on now climate control. We've got to raise the temperature by 2050, or keep it at not more than plus 1.5%, 1.5 degrees. I mean, are they gods? Can they do that? I don't believe they can. And anyway, that's also nobody. You had 40,000 people, whatever, 40,000 people flying in with jets, private jets, etc., to Glasgow, in the last couple of weeks, to try to organize the whole of the climate control problem. But you haven't got anybody meeting that we hear about talking about that the world is in a total mess financially, economically, etc. Nobody talks about that because that's not politically acceptable, of course, to do. But climate is a wonderful thing. Everybody can talk about it.
And that's why the title of our last report was Monetary Climate Change. Yeah.
Yes, exactly. It was a very good title. Very
Still,
good.
most people out of our scene didn't care about it.
No, they don't. So talking about you, by the way, again, come back to incrementum. So we started Gold Switzerland Matter on Asset Management. No, we started before, but we decided, as I said before, to introduce to people the possibility of protecting their wealth by having, holding physical gold outside the banking system under their direct control and physical. They could actually touch it physically, go and see it, etc., not in a fund or anything. So that's what we consider to be the ultimate form of wealth preservation. And of course, the demand is increasing for that. Has for as long as we've been doing it, and it's now more people are going to see that they need to protect some of their wealth. And of course, my view is that pension funds and institutions now they're not allowed to, some of them, but they have to go into gold or inflation protection in one form or another. That could be a fund, or it could be physical. That will come. The real move in the precious metals market, in my view, hasn't started. And you've been in it 15 years, I've been in it over 20 years, and it hasn't really started. And the reason is that all the things that we've been talking about, that the financial market, what's going to happen in financial markets and the printing, etc., will put enormous rocket under inflation and b therefore precious metals. So you have in incrementum, you have a different solution to ours but also with precious metals. Just tell us a little bit about that.
Yeah, well, at Incrementum, we're five partners, 5 equity partners. So we don't regard ourselves as bankers or just fund managers. We're running a business, and we've got a very low time preference. So my dream would be to pass on my part in the company to my kids. I mean, that's something that I really work for. And so we did set up the company in Liechtenstein. That's no coincidence. I think it's next to Switzerland, probably the best jurisdiction within Europe. We basically do 3 different things. We've got a wealth management department where we manage high net worth individuals' money. Then we've got a fund management business where we manage investment funds. Everybody of us is invested into his own funds, so we really have skin in the game. And then we're doing the research part, which is the In Gold We Trust report. On the fund side, you know, we try really from the beginning of every fund. We set up those funds that they are really crisis proof. So we choose only the best partners. We have got different strategies. Mark and I, we manage an inflation protection fund. Then we discovered the Bitcoin very early on in 2012. For us, we always said, well, you know, it is very, very interesting, but obviously it lacks the track record that gold has. So therefore the risks and also the volatility is just much bigger than with gold having a 5,000-year track record. But, you know, we try to combine physical gold, Bitcoin in cold storage in one fund. We actually use and take this volatility of the crypto space to harvest the volatility via an options model, which is doing very well. Then we've got one fund that combines gold, silver, mining equities, and crypto. So I'm also very active, as you know, in the gold mining space. That's why I lost so much hair over the last 15 years, and you still have got great hair. So you know
gray.
The mining space is a different animal. Very, very, very interesting, but you really have to do your homework because there's just additional risks and other risks. You know, you've got political risk, you've got management risk, you've got geological risk, and so on. But the reward also is very, very interesting. And if you're lucky, you can find those 40 baggers. And then we've got one.
But I think you've got to mention also on any measure or any valuation now, gold and silver miners are the most undervalued of any asset class really today. Because there are good and bad ones, but nevertheless, that era hasn't started yet either.
No, it hasn't, and I think the combination of gold and mining stocks definitely makes sense. But people always ask me, should I rather buy mining stocks or gold? And I said both, actually, but completely different risk profiles.
Yeah, exactly.
I think, you know, the mining industry did a tremendous job over the last couple of years. They cleaned their balance sheets. They focus on shareholder value. They reduced their cost structure. So I think the gold mining industry is at its healthiest shape ever. And I tweeted out a little video a while ago attending a gold mining conference in the US. And it said, and it showed one man with a suitcase, and he was leaving a room, and it said, somebody please stop this last gold mining investor from leaving the conference.
I saw that,
so it was really a huge venue, and there were like 20 people. So this is something that you normally don't see at the top, but rather at the bottom.
Good sign,
So it is a very strong sign. It's a bit like James Turk speaking at the Denver Gold Show here in Zurich, and there were also like 15 or 20 people in the audience, and this was very close to the bottom in gold actually. So I think those things they tell me, well, gold being, you know, $250 away from the all-time highs, but the negativity and the pessimism that I see in this area is really astounding. So that's actually, from a contrarian point of view, that's a very, very nice setup that I see. And I said recently on an interview with Kitco, I talked to very old friend of mine, and he knows his gold and he knows everything. He follows it, and he asked me, Ronnie, where's the price of gold going? And I said, well, we could see new all-time highs in the price of gold over the next couple of weeks. And he said, no way, gold is dead. And I said, well, if a die-hard gold bug is already that negative, that's probably a good sign that many people have thrown in the towel. But I think we should say, and we've got a similar approach probably, Egon. From my point of view, it's not the price of gold rising. Exactly. It's just the purchasing power of money that is falling. And in euro terms, gold is up, for example, 4.2% year to date.
Well, and it is about 35% above the 2011 peak.
Exactly.
In euros.
Exactly.
People focus always on the dollar price, but most of the world is not based on dollars. It's just one part of the world. So you should really always think about gold in your own currency. And in virtually every currency, except for in dollars, gold is way above the 2011 highs. And it's only a matter of time before it reaches it in dollars also, or surpasses it. It has once, but it will again do that.
But I think, as an investor, and if you're not into gold yet, I think it's a decision. Basically, buying gold is a decision to exchange it against euros, Swiss francs, exactly. US dollars, whatever. And it is a bet that the purchasing power of fiat money doesn't rise. And with all the things that we talked about in this conversation, I think it is absolutely impossible that the purchasing power of a euro, a dollar, or whatever will rise significantly over the next couple of years, if not decades. So that's already, that's basically the very, very fundamental case for gold to be made. And I think that more and more people are actually realizing this.
But as we said before, history proves that we are wrong. Throughout history, it's always been the case. Now there are short-term fluctuations, but even in this last era, last 100 years, gold is or money is down 97 to 99% against all currencies, and in the last 20 years, money is down around 15%. 85%, 80 to 85%. Money is down again, in real terms against gold. So, it's a pretty safe bet. Sure, if you buy it at the very top, which is not where you should buy it, but if you wherever you buy it, that over time you're actually in X number of years, you are going to reflect what's happening to the currencies, and therefore you're going to do better than the paper money. So you have one way with incrementum, with various funds and very good funds, basically to help people to protect their wealth, all in the crypto mining sector. Or crypto is a smaller part, but mining, gold, silver, etc., inflation hedging. We have it with physical. So we think that we are going to hope that more people will actually look for ways of protecting themselves, because that will be absolutely necessary. But I'm, just talking about rounding up a bit, I'm concerned about the world, extremely concerned. We can talk about all of this in cold terms, but I think that this will lead to collapse, which will be incredibly difficult for the world to cope with. Bubbles always burst, and since this is a super bubble of proportions that the world has never seen before, and it's never been global before either. Before it's always been a nation or maybe a continent, and the rest of the world has been able to cope with it. Now it's the whole world exactly in the same position. There's no one who can bail anyone out, and whatever digital money the central banks will create will again be just fake money, have no substance. So sadly, in my view, there is no solution. And whether it takes 1 year or 5 years or 10 years, nobody knows. We will know afterwards. But the risk is here today. And that's why the risk is that it means that investors have to protect their assets now. Don't worry about if the stock market is going to go up another 1 or 2% or 5%. It doesn't matter. You protect your risk now when it's there. It's bigger than ever in history. And therefore, you and I are helping a few people doing this, and some institutions, etc. And people should really listen to the advice that we are giving here, because it's no use waiting until afterwards. This is going to happen when it happens, and it could happen, as I said, very quickly, or it could take a few years. But when it happens, it's going to be so quick, it'll be a shock for the world. A debt bubble, when it bursts, that is just going to be, a massive waterfall, basically, and you won't have time to stop in the middle and look at what's happening. But so, that's you could say it's, so I think we will have hyperinflation in the next few years, and then at some point there will be a deflationary implosion. Gold and silver will be as important in deflation as in inflation, always has been, and will be this time too. Do you see it differently?
Well, let's perhaps ask from the other direction. What would make me negative for gold? What would make me really bearish? And as you know, we tend to write quite a lot about gold, and we crunch the numbers, and probably the most important driver for the price of gold is real rates and the direction of real interest rates, and especially the direction of long-term real rates. So if you would say, well, my forecast is we will see positive real rates over the next couple of years, plus 4 or 5%, then I would say, well, okay, you should sell most of your gold.
Yeah.
But can we really afford it? Is it the direction that we're going to? Absolutely not. No. So we crunch the numbers, and actually everything until 1.5% plus positive real rates is still a good environment, but obviously negative real rates are really the foundation for every bull market in gold. And that's what I'm seeing for the next couple of years. So perhaps, Egon, at some point, it will be time to say, well, we should lighten up on our gold position, because that would probably mean that we will have sound, or at least sounder money again, that we will have solved some of the problems that we talked about now. And I hope this moment will happen, and we'll talk about that later on. And I think we should not forget there's also quite a lot of positive things going on with technology, for example. So we shouldn't completely underestimate and forget about the positive forces that we're seeing in our world. The entrepreneurial creativity. People really trying to make the best out of this current setup, and perhaps make businesses out of it, like we did. So long story short, I think we've got a very, very similar philosophy. We're not in the business of dramatically increasing the wealth of our clients. We want to protect it. We want to protect their purchasing power. We want them to sleep well, actually. And I think our clients, I wouldn't call them clients. They're actually more like partners and friends. They're doing very well, and they know what we stand for. And I think that's very similar with your approach. And I think that we both, with our writings and our interviews, perhaps we can make people think about the status quo, how to protect best from the scenarios that we see coming ahead. And if we can, make people start thinking and take precautions and buy monetary insurance, I think that's already quite a lot.
And as you rightly said, if people get through this crisis with some protection against it in the form of funds or stocks, or in the mining sector, gold and silver, or in the form of physical gold, then at the end of that, wherever, I think it's not going to be a couple of years, I think it could be 5 or 10 years. It's going to take a lot longer for this thing to correct and adjust itself, and the effects could be even a lot longer than that. But at the end of that, you have a currency that, in relation to everything else, to stocks, to bonds, to property, is going to be valued 10 times more than it is today in relation to or more, maybe 100 times. We don't know, and that's why that it will create massive opportunities. But I'm a little bit more pessimistic about the world than you are. I think it's going to be a lot worse because I think this bubble is going to burst, and we never know what the outcome will be of that. The world has always gone on, so there's no question of that. It always does, but in what form and how long does it take, we don't know. But I always say also, you say there are positive sides. I mean, we always talk about money and investment because that's our business, and that's why we're here together doing that. But there's so much more to life. I mean, the real important things in life are family, friends, and then there are lots of things that are free. Nature, books, music, etc. Skiing, exactly. Not quite
not
free.
free.
Almost. If your government doesn't close the ski slopes, of course, but like they try to do. But anyway, so there are lots of things in life that are much more important. So you have to have a balance in life. But put your affairs in order, protect what you can, and then live your life and enjoy your life and enjoy all of these things. As I said, that are not linked to money. So Ronni, it's a pleasure to have you here, we haven't finished our discussions. We're going to have another day and a half or so and you're going to come to the Mountain Vault, which is the biggest private gold vault in the world, which is unique, and you haven't seen it before, so it's really going to be a pleasure to show you, and it's real James Bond-like. So
with Bond girls included.
Yeah, well, that's extra. So, yeah, we can organize that too.
Okay. I hope my wife doesn't.
Yeah. Ronni, thanks so much, we're going to have many more talks like we have over the years. It's not going to end here. It's actually the beginning of what you and I are seeing here. It's going to make it extremely interesting for both of us and for the world.
Plenty of stuff to talk about.
Yeah, okay. Thanks so much.
Thank you, Egon. Appreciate it. Thank you.